Well, happy Pi Day. It is the 14th of March, or 3.14. I just had a conversation with my wife, and she asked me to explain why the bank runs that are happening and why crypto is pumping. So I went through, I did my best to explain it to her, and she said, you should do a video for your YouTube channel and you should explain that for your subscribers. So what I explained to her was during COVID, governments in the Western world, in the United States, in Canada, in Europe, essentially were putting out money, giving money to people who needed it, people who didn't need it, and that created great stimulus in the economy. Part of that stimulus was intended, but that stimulus has created runaway inflation. So now it's the job of the U.S. Fed, Jerome Powell, and the U.S. Federal Reserve Bank to rein in inflation. They have a 2% inflation target, and their tool is to raise interest rates to try to get inflation under control and to keep it under the 2% target. Well, they've essentially said they're going to keep raising interest rates until either they got inflation under their 2% target or until something broke. And as the interest rates have risen, stock and crypto prices have been suppressed. Well, last week and into last weekend, something broke. Three banks, Silvergate Bank, which happened to be a very crypto-friendly bank, went into insolvency and wound up operations. Silicon Valley Bank, which is a large bank which supported the tech industry in Silicon Valley, it went under FDIC protection, and Signature Bank was placed under FDIC protection by the New York financial regulators. So part of why SVB Bank failed, which was the largest of the three, is related to the interest rates going up. So banks bring in money from depositors and they invest that money, they lend that money out to mortgages or to businesses or to buy U.S. treasuries, U.S. bonds. So with bonds, there is an inverse relationship between interest rates and the price of the bond. If you have a bond and that bond was purchased when interest rates were at, say, 3%, and interest rates rise now to 5%, the resale price of that bond has now decreased. So as the interest rate environment has gone up, as Jerome Powell and the Fed have been trying to rein in inflation, you've got banks, and it's not just SVP, you've got a lot of banks which have purchased long-term bonds and other assets, and those assets are now worth considerably less because the current interest rate today is a lot higher than when that bond was purchased. Now, if the bank can hold that bond until its maturity, there's not a problem. So as depositors want their money back, these banks are being forced to sell these long-term bonds at much lower prices, and they end up losing money on these bonds. So that ends up creating a liquidity crisis and a solvency issue for these banks. So that's what happened with SVB Bank. So that's directly related to the U.S. Fed raising interest rates and trying to get inflation under control. So fortunately for depositors in these banks, the U.S. federal government, FDIC, has backstopped all of the depositors in these banks. Not the management, not the investors, but the depositors, and has said they will be made whole. So by doing this, this essentially has created and put additional liquidity into the market. So it's made the job of what the U.S. Fed has been trying to do much more difficult. So as people are seeing banks fail, those same people are seeing value in the Bitcoin proposition, where you own your own keys, you own your own coins, you own your own monetary assets. So Bitcoin has surged as people realize that the banks are not the safe havens they anticipated them being. Today as well, there was a CPI report which showed that inflation, while it's still an issue, it's not the runaway levels that it was. There was a CPI print that was published today that came in roughly along expectations. So if you're going to get on board with this surge into Bitcoin, I have some advice for you. Don't FOMO. FOMO stands for fear of missing out and piling in at higher prices as everyone is racing into an asset. If you're going to buy Bitcoin, dollar cost average. If you want to learn what dollar cost average is, I put a link above to a video that explains dollar cost averaging. And the most important thing that I can tell you is take your Bitcoin off of exchanges, put it into a self-custody wallet, either a software wallet or a hardware wallet. I'm Michael. I'm the Acadian Bitcoiner. I create videos for Zoomers, seniors, and other beginners in the Bitcoin space. Thank you for watching.